Good morning, Ron Janish here. We're going to cover the shortest term part of the professional trader series today, and there's several things that we do in order to do this nicely. Here's how it works. For example, today came into the day short in the bonds, and you can see what this guy's doing, and came into today long in gold. Okay, so came into today long in gold, and then during the time cycle, and we talk about time cycles in the program. Uh, the, the time cycle this morning for gold was right around here in this time period here. So this is the time period that we're looking for a trade, and in order to differentiate it from the gold position I already have on, I put it in a different month, and that's for mainly for illustrative purposes here. The so what I'm looking for is for something to be in the time cycle, but I'm also looking for a long or short position, whatever might be appropriate, in this one here, for example. So in gold, we already have a long position, and our target for this particular long position is significantly higher. It's let's just take a look at what we've got. Oh, what a mess. Let's get rid of this stuff. Okay. So what we're looking for in terms of a long position target is up here in the probably beyond 1360. Okay, we have this line up here right now, but I don't know that that's really relevant. And so I'm looking for something probably above 1360, and we're at 1330 right now. Okay. Let's take a look. Okay. We wound up going long in the other month, which is sort of liquid enough, and put on 3 positions. Now, why did I put on 3 positions? Because the risk on 3 positions in this time period here with this particular signal is within my comfort zone, okay, which I talked about in the previous video. So that's what I'm looking at, and that's the whole logic behind it. Now, as you can see, I had a nice little trend line coming down here, and prices broke above it and came back down to it. And then we had some other things in the patterns here that I know my buddy Tom likes. And so this is what we're looking at. And if it doesn't work out, there'll be a loss of, maybe $500 at the most. And if it works out, there'll be a gain of that'll be significant. You know, if you take 3 all the way up to 1360 from 1338, that's at least 22. You know, that's thousands, and that's very doable. So as you can see here, price is jumping up and down, and the open position value is jumping up and down as well. So this is what we're looking at. Probably gonna get out of some of this position by the end of the day, if not all. But we'll just have to wait and see. But if I decide to take it up, then I'm looking at what the original situation was, which would have been over the 1360 area, which is a good chunk of change if you're holding on to 3 contracts. Okay, and that also means a bit more risk. We all know how crazy gold can go. Right, so that's the long and short of it. So remember, what we do is we combine what we are long or short now, okay, because we're looking for an entry in that. That gives you a very tight risk, because that's the name of the game, is handling that risk. And with using the course methods. And the other important part is it has to be within the time cycle. Okay. And using the time cycle technique is very easy to use. There's nothing wacky about it like most others. It's pretty easy. So that's what we have going on, and that's it for today, Friday, January 19th in the year 2018. Ron with andrewscourse.com signing off.